Recently, we saw Uniswap, the decentralized protocol that allows for swapping of one crypto asset for another, mainly on top of the Ethereum blockchain. So Uniswap was one of the first automated market makers or decentralized exchanges. And a few years ago, they released a token, their own token called Uni. Initially, to those that had been using Uniswap for years, it was one of the first really huge airdrops. But from that time till now, Uni, the token, did not receive any of the fees that Uniswap, the protocol, charged. So Uniswap, the protocol, was charging fees. All those fees went to the actual liquidity providers. Those were actually providing the liquidity for the exchanges to happen. And I'm not going to go into all the gory details about how Uniswap works, but the idea was Uni, the token, was simply a governance token. If I had the Uni token, that just meant that I could vote on proposals. So I could, propose something, and then I could also vote on that, or I could vote on other people's proposals. And there was very little in terms of fundamental valuation that flowed from Uniswap, the protocol, to Uniswap, the token. But what happened recently was there was a proposal for fees that Uniswap charges, and they charge about a 0.03% fee on every transaction. So those fees, some of those fees transfer through to the token holders. And that vote was approved. So now there's going to be a change where token holders will get the fees. Now, in the past, many of these governance tokens, the tokens that really only allow you to vote on things and don't allow you to participate in the profits or the revenue or the fees, many of those tokens existed because the thought is that tokens that allow you to participate in the fees would be seen as securities by the US government, whereas governance tokens can't really seen as securities because it's not giving you rights to the assets, it's not giving you rights to the profit or the fees or anything like that, might not be seen as a security. So here we have this big change from Uniswap. So a few things I want to talk about. One is maybe, we'll see more of decentralized protocols or DeFi protocols start to vote or start to propose to switch to fees. It's going to be a little iffy, and we have to see what's going to happen with regard to regulation. Are the regulators going to see these tokens now as securities and going to have an issue with them being listed on centralized exchanges like Coinbase and Kraken and some of the others? Is that now going to be a problem? On the positive side, on the really positive side, what I think here is, one, maybe there's some more value now in the governance tokens, because we in the past had theorized if you have the governance tokens, you can actually vote to convert from just a governance token to a token that realizes fees. But now we actually saw it happen on one of the largest decentralized protocols. So that's really interesting. And we start to get an idea now of more fundamental analysis being able to be utilized in determining the value of a token. So now we can look at Uniswap, and now, much of the thought can be around, all right, how much demand do we think there'll be for Uniswap? How much fees do you think it'll generate? And now that those fees flow through to the token, we have a better idea of the value of Uniswap. And obviously the Uni token went up in value after that because now it has some valuation behind it. It's not speculative. It's not theoretical that maybe you can vote for a change in fees. We voted for a change in fees. Here's what it is. And now any speculation is on, are people going to continue to use Uniswap? Is it going to grow? And therefore, how much in the fees are going to translate through to the token? It's still different from a traditional equity, like a dividend paying equity, because you don't own, nor do you pretend to own, any piece of the protocol. You don't own the assets. It's not like if it gets totally liquidated, you get a piece of the assets. A protocol can't really get liquidated. Do you have any piece of the treasury? So you don't have a piece of the Uniswap Foundation or the Uniswap protocol treasury. And we also have to keep in mind that there's a company, Uniswap, that builds front ends, and then there's Uniswap, the protocol, and those are different. So there's still plenty of things to learn about this and think through. But interesting that we went from governance tokens, so a token that was released almost meme style to say, look, this is the token that kind of represents Uni and you can vote on things, but we're really not sure what you're going to vote on that's going to be that impactful to the price of your token. Now we have a huge vote that says you can now participate in the fees if you're a Uni token holder, and of course the Uni token holders voted for that. But now there's going to be thought around securities and regulation. But really interesting to see now a decentralized finance token for the largest decentralized exchange, an exchange that at times does more transactions per day than Coinbase does. Now we're going to see fees from the actual protocol pass through to the tokens held by the token holders, and now we can start to think through fundamental valuation for decentralized protocols, and that is going to be really interesting. In that, maybe we'll see more of these protocols start moving more towards sharing the fees with the token holders, and we can really see some good fundamental analysis on those protocols and therefore the values of those tokens.